We live in an era where tapping a piece of plastic or waving a smartphone feels like the pinnacle of human convenience. We have willingly traded leather wallets for digital screens, convinced that physical money is a dirty, outdated relic of the past. But this illusion of progress is masking a terrifying reality. Welcome to Unfiltered Finance. Today, we are tearing down the utopian facade of the cashless society. The death of physical cash is not a natural technological evolution. It is a calculated, multi-trillion-dollar war on your fundamental right to financial privacy. And the most brilliant part of this war, you are actively cheering for your own defeat. Let's look at the data. In the second half of 2025, the euro area alone processed an astonishing 83.5 billion non-cash payments, with contactless transactions jumping to nearly 33 billion. The numbers are staggering, and the transition feels unstoppable. But every time that terminal beeps, a permanent, indelible record of your existence is created, catalogued, and monetized. For decades, we have been told a comforting lie that a cashless world is purely about speed, efficiency, and your personal security. But if you actually follow the money through the digital labyrinth, a completely different, much darker picture emerges. The push against physical cash isn't organic. It is heavily orchestrated by corporate giants, payment processors, credit card networks, and big tech. Think about it. When you hand over a $20 bill for a simple cup of coffee, the transaction ends right there. No data is recorded. No algorithms are triggered. It is a completely closed, secure, and private loop between two human beings. But the moment you swipe a plastic card or tap a phone, that exact same purchase activates a massive, invisible network. You instantly alert dozens of third-party data brokers. At that moment, you are no longer just buying a cup of coffee. You are actively generating a highly lucrative, real-time psychological profile that is permanently attached to your digital identity. Because these corporations don't just process payments, they track exactly where you travel, how much you spend on gas, and what hotels you stay in. They know exactly what medications you buy, tracking your health conditions long before you ever tell your insurance company. They know what political books you read, what causes you donate to, and what side of history you are supposedly on. And most terrifyingly, their algorithms know exactly when you are financially stressed, vulnerable, and desperate for a predatory loan. It's time to wake up. You are not the customer of this sleek, convenient digital payment infrastructure. You never were. In the cashless economy, your personal financial data is the actual, multi-trillion-dollar product being harvested, and it is being packaged, analyzed, and relentlessly sold to the highest bidder on Wall Street. How did we surrender our privacy so easily? Through a psychological phenomenon known as the boiling frog effect. Financial institutions didn't explicitly demand our data. Instead, they weaponized convenience. They offered us 2% cash back, airline miles, and frictionless checkouts. We traded our anonymity for digital dopamine. Over time, the narrative shifted. Cash became associated with illicit activities, tax evasion, and the black market. The media and governments painted physical currency as suspicious. If you pay for a large purchase in cash today, you are immediately viewed with distrust. This social conditioning has been remarkably effective, convincing the average citizen that only criminals need financial privacy. But privacy is not about hiding a crime. It is about protecting your autonomy from unseen observers. Privacy is a fundamental human right. It is a shield that protects your daily life from being permanently recorded on a corporate ledger. And in the modern world, physical cash is the last remaining key to that autonomy. Let's break down the anatomy of a single digital swipe. Behind the scenes, every time you tap, the merchant pays a processing fee, effectively creating a massive, invisible private tax on the global economy. But the fees are just pocket change. The real goldmine is the metadata. Sophisticated algorithms instantly analyze your spending velocity and habits to determine your creditworthiness and calculate insurance premiums. For example, if you suddenly start buying cheap, low-quality fast food and switch to discount liquor, risk models flag you as distressed. Without a single human reviewing it, your credit limits might be lowered. All of this algorithmic manipulation happens invisibly in the background, generated solely by the endless trail of digital breadcrumbs you leave. In a fully cashless financial system, you are trapped in a closed loop. There is absolutely no escape from this all-seeing corporate panopticon. Every single cent you earn and every single cent you spend is tracked and ruthlessly evaluated by cold artificial intelligence on Wall Street. But as terrifying as the relentless corporate surveillance we just witnessed may be, it is only half the threat. The ultimate weapon in the war on physical cash is being forged not by tech CEOs, but by governments and central banks. Enter the Central Bank Digital Currency. Right now, governments worldwide are in an aggressive, high-stakes race to launch their own digital fiat. According to a pivotal 2025 report by the Bank for International Settlements, often referred to as the Central Bank of Central Banks, the global financial system is aggressively pushing towards what they officially label as sound digital money. The report emphasizes a demand for absolute singleness and elasticity, which is bureaucratic speak for absolute, centralized power. Now, you might think you already use digital money every time you check your banking app. But when you use a regular debit card, your commercial bank acts as a legal and operational buffer between you and the state. A CBDC removes that buffer completely. It is a direct liability of the central bank. You are banking directly with the government. Furthermore, physical cash is what we call a bearer instrument. If you physically hold the paper, you own the purchasing power, period. CBDCs, on the other hand, are entirely programmable. They are not just static units of value, they are active pieces of software code. Code that can be rewritten, updated, and manipulated by a central authority at a moment's notice. This seemingly minor technical difference represents a monumental shift in human freedom. It is the exact moment where the surveillance state upgrades its arsenal. It moves from merely monitoring your financial behavior to actively and directly controlling it. Imagine a digital currency that is strictly programmed to expire if you don't spend it within 30 days, forcing an artificial economic stimulus by making your hard-earned savings literally melt away if you try to hold on to them. Imagine a digital wallet that instantly and automatically freezes your access to your own funds, simply because a background algorithm determined that you exceeded your weekly carbon allowance by purchasing too much meat or fuel. Or imagine being locked out of the economy because you donated to a political cause that the ruling party disapproves of. This is not science fiction or a dystopian warning from a novel. It is the very real technical reality of programmable money. The underlying architecture of central bank digital currencies is actively being designed and tested right now to allow exactly this terrifying level of granular, micro-level control over your everyday financial life. Look at the real-world evidence. In Europe, the ongoing, highly contested debate between the European Central Bank and the commercial banking sector over the rollout of the hypothetical digital euro is highly revealing. The core discussion heavily centers around establishing strict, hard-coded holding limits for everyday citizens. Authorities are openly proposing restricting users to holding a maximum of 500 or 3,000 digital euros at any given time. This is explicitly designed to prevent citizens from using the new digital currency as a safe store of value. They absolutely do not want you hoarding wealth or saving money independently outside of the easily manipulated traditional banking system. Instead, they want a hyper-efficient medium of exchange, a fast-flowing digital current that they can completely dictate and control. Proponents argue that CBDCs will boost financial inclusion. But academic research published in 2026 highlights that the social acceptance of these digital currencies heavily depends on anonymity and privacy-centric designs. Without robust anonymity safeguards, public trust collapses. Citizens intuitively understand that a programmable CBDC strips away the last layer of financial autonomy. We at Unfiltered Finance believe that true financial literacy means understanding the fundamental difference between the money you actually own and the money you are merely permitted to use. Physical cash is the former. A CBDC, operating on a centralized ledger controlled entirely by state bureaucrats, is definitively the latter. Beyond privacy, forcing a society onto a 100% digital grid introduces catastrophic systemic risks. A cashless economy is highly brittle. It relies entirely on a functioning power grid, continuous internet connectivity, and impenetrable cybersecurity. But the reality is far from impenetrable. According to a 2024 academic study on cashless transitions, the year 2023 saw 2,365 major cyber attacks, affecting over 343 million victims, exposing the extreme vulnerability of digital financial institutions. As societies become entirely dependent on digital platforms, they become prime targets for state-sponsored hackers and severe technical failures. Consider a localized disaster, a devastating hurricane, a massive solar flare, or a targeted ransomware attack on a national telecom provider. In a cashless world, an electrical blackout is an instant economic freeze. The entire financial system halts. You cannot buy food at the supermarket. You cannot purchase fuel for your car to evacuate. And you cannot pay for emergency medical supplies. The economy completely ceases to function. It is paralyzed. Physical cash serves as the ultimate offline backup, an analog failsafe that requires no batteries, no Wi-Fi, and no server authentication. Eradicating physical cash means intentionally removing the only shock absorber we have against a technological or natural catastrophe. Governments and major enterprises are constantly urged to invest in massive digital backbones and highly redundant backup systems. They promise that the grid is resilient and secure. But the truth of computer science is absolute. No network is completely immune to failure. Despite the aggressive push towards digitalization, the underlying reality is that citizens still crave the safety of physical money. The August 2026 Diary of Consumer Payment Choice, released by the Federal Reserve, reveals a fascinating truth. Cash remains absolutely essential. According to the official data, US consumers still make an average of 6 cash payments per month, accounting for a solid 14% of all total transactions. This completely shatters the illusion that everyone has abandoned paper money. More importantly, the data shows that just over 76% of Americans actively carry physical cash on their person every single day, holding an average of $69 in their wallets right now. And when it comes to long-term security and peace of mind, 45% of consumers store physical cash at home as an emergency store of value, holding an average of $364 tucked away safely. People intuitively know that when the grid goes dark, paper is the only thing that works. The Fed's 2026 data also exposes a harsh demographic reality. The war on cash disproportionately harms the vulnerable. Consumers in households earning less than $25,000 make significantly more cash transactions than wealthy households. Rural residents rely on it heavily. When businesses refuse to accept cash, they are functionally discriminating against the unbanked, the elderly. Welcome to this training course. We will be covering multiple modules, and we hope that the narrator helps make the experience enjoyable. The cashless utopia is largely designed for the urban elite, forcing the lower classes into a digital ecosystem That nickel and dimes them with overdraft fees, maintenance charges, and predatory algorithmic profiling. Let's look at this through a behavioral finance lens. There is a literal, physiological pain associated with handing over physical paper money. Neurological studies show that parting with cash activates the same regions of the brain associated with physical pain. You can literally see and feel your wealth decreasing as your wallet becomes thinner. Digital payments completely bypass this neurological speed bump. When you just tap a piece of plastic or wave a phone, the pain is entirely gone. Instead of pain, you get a small, engineered burst of digital dopamine, a satisfying chime, a green checkmark. Studies consistently show that consumers spend up to 20% more when using digital wallets compared to cash. This is exactly why the corporate machine wants you cashless. It is not about making your life easier. It is about artificially inflating your consumption. They want you completely disconnected from the reality of your own wealth, driving you deeper and deeper into a perpetual cycle of consumer debt. You are being gently nudged, algorithmically, by carefully designed user interfaces, into endless, thoughtless consumerism. A cashless society turns you from a conscious spender into an automated, predictable consumer. But what about stopping crime? The primary justification governments use to limit physical cash is combating money laundering and terrorism. Yet, the largest money laundering scandals in history have been facilitated not by duffel bags of cash, but by highly sophisticated, regulated international banks, digitally transferring billions offshore with the push of a button. The system often completely ignores massive corporate fraud, effectively turning a blind eye to the elite. Regulating physical cash out of existence doesn't stop crime. It merely forces illicit activity into other, far more complex digital avenues. The fight against crime is the perfect Trojan horse. It sounds incredibly noble to the public, but its true function is the total financial surveillance of the everyday, law-abiding citizen. The real criminals adapt and evolve, while your fundamental privacy is permanently sacrificed. We are at a crucial inflection point in monetary history. Once physical cash is entirely eliminated from the system, reversing course will be statistically impossible. You simply cannot unboil the frog once the water has completely evaporated. If every single transaction you make requires active permission from a bank or a central algorithm, then you do not have true economic freedom. You only have an allowance. However, there is a glimmer of hope. A silent rebellion is currently underway. Welcome to this training course. We will be covering multiple modules, and we hope that the narrator helps make the experience enjoyable. A staggering 90% of consumers plan to continue using cash in the future. They intuitively recognize its vital role as both an offline backup and an unbreakable privacy shield. People are slowly waking up from the frictionless digital illusion. They realize that their personal financial data is actively being weaponized against them by corporate monopolies. In this heavily surveilled landscape, choosing to use cash is no longer just a payment preference. It is a deliberate, powerful act of preserving your personal sovereignty. Every time you choose to pay with physical paper instead of tapping a screen, you are casting a vote for autonomy and actively keeping the financial system honest. To wrap up this deep dive on unfiltered finance, the death of cash is the birth of the ultimate surveillance state. Whether it is a corporate algorithm predicting your next impulse buy, or a government CBDC dictating what you are allowed to consume, a fully cashless society is a society without economic autonomy. Physical cash is liberty in printed form. It is peer-to-peer, offline, anonymous, and permissionless. Guard it fiercely, because once it is gone, your financial privacy will become nothing more than a footnote in history. Thank you for joining us. If you appreciate objective, uncompromising analysis, subscribe to the channel. Until next time, stay vigilant and stay unfiltered.